Hello. All right, hi there, guys. Can you let me know if you can hear me clearly? I'm pretty sure I'm coming through okay. And we'll get started. How are you, Paul, anyway? If you can hear me, of course. Okay, I'm pretty sure I'm coming through all right. Bit of a bugger having to wait for this delay, but I'll plug through it. Maybe it's my end here. All right, guys, I'm just checking. I might have it on the wrong, if you can hear me, of course. Mr. Mike. Pretty sure we're good. Ah, perfect. Bit concerned there for a while there, John. Sorry. All right, let's get started. Welcome, guys. Hope you had a good weekend. Uh, nice and relaxing. Welcome to TradeSetup in the live stream. What day is it? 21st of May. So we're chugging along. All right, so obviously we're going to keep these things a bit shorter than usual. I think I tend to babble on a bit. So I think we don't need to chat too much about what the markets are doing, but we'll gloss over them. Unless anything's changed dramatically, then we'll spend a bit more time on them, obviously. But the general markets we'll just gloss over, and then we'll get stuck into more some charts, some trades, the fun stuff, the interesting stuff. All right. So whenever you feel like it, if there's something you want to look at, just start chucking it into the chat, and then we'll get onto it as soon as we get going. So what I want to talk about today, what I'm just going to take a look at, obviously we'll take a look at the markets, take a look at a bit at oil, bonds. There's not much moving in at the moment. It seems to be sort of stuck in that range. I think, the US is doing okay. They're chugging along, and then you've got oil's ticking higher, which is drag. Energy sector's doing okay over there and over here. We've got some good runners at the moment. So it's just really trying to take a look at it and see how far can it keep going. So we'll take a look at oil, see where that's going to. I mean, it's stretched at the moment, but because there's nothing in the way, there's no clear sort of definite resistance it can run into. It could keep ticking along stretch and just keep heading higher, keep getting bought up until there's any reason why people are going to bail. Which in oil, of course, there's not too many reasons at the moment. We've still got Venezuela outputs dropped. There's still the argy-bargy with China, probably won't affect oil as much, but there's not too many things that are going to cut. Well, you got supply demand, the two fundamentals. Demand's obviously high, supply is dropping off, and that's obviously a good thing for appreciation and price. And if you keep getting things happening in the Middle East, which are going to constrain supply, then yes, that thing should keep going high. And if there's no resistance in play, then you wouldn't expect that to back off. So that's been some good trades for us on oil, or in obviously on the ASX with BPT. We've had actually that's pretty much the only one. There wasn't too many that was setting up for what I like. They did grind higher, but not too much. So I got sidetracked there. But we'll take a look at oil. Bonds are the other thing that obviously in the US is people are keeping an eye on interest rate. Sorry, not interest rates, but US bond yields. Now they have kicked up through that important 3% level, kicked on a bit, and now they've just backed off. Sort of edged back down to that 3% mark. I don't know exactly what they are, but probably the last on Friday they edged off a bit. So probably there was no real concern over there, but it does take the equity market a bit longer to react. People are more inclined to hold that buy hold mentality. So they're going to be focused on the bonds now. If it turns around and starts heading higher on the yields again, and bonds head lower, then that could be, you might see that sort of constrain at least constrain the moves higher on equity in the US anyway, which is going to flow onto us. Now we'll drop that. I'll get rid of that, and I'll get, so don't forget transition. We're there, and we'll get into it. So start off with the markets. The what we got here, the S&P. Yeah, it's still holding some high lows. We've got that double bottom we've talked about. This high low in here, potentially around that 26.20 to 15 mark. High low, it's just pushed it up through. It just washed out this high. It's struggling. It's struggling to continue up because we've made all-time highs previously. A big washout. We've cleaned out a lot of people with this sort of choppy action, but it's yet to build back up again. I would say it's showing some good signs, but again, when you've got bond yields that could, bond yields kicking up, which putting pressure on downward pressure on the equity market. We've got the latest profit reporting in the US. People are looking at it. Could that be the peak? May or may not be the peak. Is that the best we're going to see? So that's going to probably put downward pressure on the equities. Sooner or later, people are going to have to take, if they haven't already, may look to be taking profits. So there's a bit of pressure, but on the flip side of that, there's still pressure to the upside. The economy's going well. There's nothing wrong with it. Companies are going well. They're growing. Everything's doing the right things. It's just sort of those. Now we'll be looking at interest rate rises and the cost of debt and things like that. As that and we're obviously, all markets look ahead. They don't just look to what's happening tomorrow, but you look months in advance. So yeah, that's probably the headwind. So that's why I think we're sort of stuck, just oscillating between support and resistance. You're going to get these little push-ups. Some good news. Just going to get rid of that. You're going to get sort of those rallies, and then they don't last too long like they did back. When we're rallying back here, just kept ticking along nicely. Some good news, bang, off she goes. But what we're seeing is a couple of good days, and then maybe some profit taking. So the positions ended up a bit shorter than normal. A bit quicker. People are trading not so much your longer term. Their time frames are shortened. So that's that's the S&P. The Dow's pretty much the same thing. I've got the FTSE. Look at that, bang, straight up to that 7,800 again. So that has just powered along. That's really powered along. Look at that V shape. So I'm expecting on the FTSE, just you'd expect a reaction up here. Anyone that's been buying it on the way up, it's a bit like the XJO. We hit that 61.50. And then we backed off from there. It has reacted off that zone because we are stretched. I mean, look at this. This is probably the prime example of being stretched. And also the reason why you don't just look at your stochastics, you've got to look at price action, and you've got to look at your levels, because if we're heading into a level, when the market would say it's 7,500, and you looked at and go, oh, look, it's stretched up here. I'm going to book everything. So be it. We'll see how we go. Well, even if it was way back, just when it started ticking up to 74, man, that's when your stochastics were stretched. There was no clear resistance at all. There's nowhere where it could pull up short, retest a resistance zone or find some sort of resistance zone and then back off when it's in a stretched market. This had nothing in the way of it, so it's just continuing to plow up to that 78. If you got out at 74, you've left 400 points, probably about 400 points on the table there, whatever that means in equity terms, what in your shares that you're trading. So that's just one thing to say, don't get stuck on your indicators too much. Indicators never give you a true picture. I think supply demand, the way we're looking at it, you can look at it anyway. I think they're a good handy helper. But supply demand and key levels, your key levels are as important. In saying that, I'm probably going to show you a currency pair. I think it's a good, the US Swiss. I was trading that on Friday night, so I did do okay on that. But it's a good example of, adding or building your picture. So we'll take a look at that in a minute. That's your FTSE. The DAX, it's heading up. So you've got this big zone through here. We just pushed through 13. Resistance will be up towards 13.5. So another 400 points higher, I'd say, 450 to higher. So it's in a choppy zone at the moment. It's not just resistance is just a hard and fast figure. It's more of a zone. I'd like to think it's more of a zone where you're going to get some sort of reaction. People might take it off early, sell it when it touches the bottom end of the zone or the top end of the zone. People are a bit more aggressive. But all in all, this DAX is just powered off that 12,000 up to 13, just coming into that resistance zone where we spent a lot of time chopping between November and Feb, pretty much choppy in that zone through there. So that might start running to some resistance, or you might get those sudden reactions getting a bit bigger on the downside, less on the upside. XJO, look at that, 61.50, straight into that zone there, and we've been backing off since. It's not with high conviction either. I'm expecting a bit more chop here. what we've spoken about and what's to keep an eye on if we start getting. So we've got our resistance zone. We've pushed up into that resistance zone and really just reacted straight off it. We had, well, let's just draw that better. We had a little kink, a little back off just prior, and then we just accelerated up into there. And now we haven't really pulled back as such. We've just sort of come back down to the, and you can see that's around that 60, what, 60? What's that low just here? 60, 61. So we're just coming into there now. Now I'll be keeping an eye on this to see if we can just break through that and we start getting this back and fill where you get these legs. It sort of grinds lower. Now that's obviously it's a bit negative. It's backing off that 61.50 zone, but it's not showing any conviction. It's not showing any conviction, and it's just sort of what it's doing is it's really taking a bit of heat out of the market, and you'll get your stochastics go from overbought to oversold. And if it starts picking up there, that's where I'd be more inclined to start looking at, some entries for shares and good quality setups, because this thing could then turn around and just blast up through 61.50. We'll have to see. It's going to take some time to work out. It hasn't really started yet. All we've got is that it's reacted off 61.50. Okay, the market stretched from that start of April right down at 57.50. So that's a good solid move. So anyone that sort of bought it up, especially late into that move, that was watching it go up, thinking it's going to pull back, and you got to here and he's got bugger it, I'm getting in. I don't want to miss this, and then it starts reacting off that zone. These ones are going to be the first ones to be squeezed out, and obviously the people that bought lower, lower, lower are going to be the next ones to get squeezed out, So it's just really, for me, it's just how much it's going to pull back. Are we going to get some buying on the way down? Are we just going to start to get supported and then start building, a good higher low or a launching pad to kick up through 61.50? It's the XJO, Nikkei. It's not going too bad. It's kicking along okay. This move up is nice and controlled. I don't mind that at all. You can see it's pushed up. We got to the highs around 24. Pretty much fell off a cliff there. Reacted like every other market. Retested another lower high, straight through the lows, and then bang, we've been straight up since. So that's really just a big washout of 21,000 on the Nikkei anyway. Big washout. Started holding it again. Yeah, that minor retest. We pulled back, retested. So that's a good heads up that this is enough of a flush out of that market. But the steepness of this has been quite handy. It's been quite good. It's been quite controlled. Like I said, there's no, snap in volatility or spike in volatility to get people a bit nervous, get them on the edge of their seats. It's been nice and controlled on the way up. Hang Seng hasn't done too much really. We've had that big push up, sell off, and it's just been going sideways. Sort of that looks like it's contained between 2150 support or 29,500 support and up towards that 31.5 to 32 zone up there. So it might just react, edge its way back down to 30,000 or a touch lower, just wash out these levels and react back up. But either way, it looks more rangy than anything else. All right, now that's all I want to touch on. So the things that to me are moving it is oil's not really moving the market as such, but it's something to keep an eye on. I know we've talked about this in the past. I thought I'd just touch on it before, obviously before I forget. So crude oil, you can see it's had, this is a longer term, this is a daily chart, but you've got that longer term level right up at 110. Pretty much fell over off that zone, straight through that support at it was around 77.50. You can see the support through here, and then you come all the way back down. I don't know what I've got this level. It's okay. So that was a previous low at around 32.51, and that was after the GFC, wasn't it? Yeah, that was sort of the GFC, a boom straight down. So it's pretty much washed out that zone. Then we started holding higher lows and building back up again. So we've taken out, I wouldn't say this is a key, it probably is the anchor. I'd say this is the anchor to the downtrend for this trend down. It was pushed down, popped back up, retraced a bit, had another acceleration down into that support zone. So the anchor was taken out way back in about, what are we there? Somewhere in January, start of the year essentially. But it's been holding, and people have been saying this is getting stretched. And I've said it before. It's a crowded trade. Crowded by I mean everyone knows about it. Crude, it's going up. Everyone's sort of waiting. If you haven't been positioned, there's probably the percentage of people that aren't positioned that know about it is very low. Anyone that wants to get into crude is either in it or they've decided not to at these levels. So it's getting a bit crowded, which means there's going to be a lot of fuel when this thing turns around, topples over. But you've got to look at the zones, and this is something you've always got to take into account. Where could it be going to? I mean, there's nothing if you're looking left, there's no sort of resistance zone that it could come into, apart from potentially up towards that 70, 77 zone, 70, yeah, about 77, 76, 50, 77. I'd always go a touch under that when you're coming into it, a touch above if you're looking for it to fall short, or just could come up short there. But it's still only 71.80. That would leave you about $3, $4, $5 rally potentially still in crude, which could continue on before, and it might if it just expands quite sharply into that level. Well, if it expands sharply into that level, accelerates in there, just pops into it now. A couple of good days of rallies, then I'd expect a good handed reaction off that. Then you might see if anyone actually does just get out of the oil and start, or you might get a few shorts starting to load up. Anyone that's been long for all this period has been driving up, exiting those positions, and then crude might roll over and sort of return back to the sorry, what am I say there? Revert back to the mean, meaning coming back to this longer term sort of support line, which it means if that's the case, then it's got a long way to come down as well. So just be wary of that. I think in saying that, looking at if you're going to get into crude, if it has still got another $4 rally in it up towards that 76 zone. Just looking for quality setups now. On the ASX, we had BPT. We actually exited that because I just think it's getting a bit too stretched. I know we don't normally do that, but I just don't see much reason to continue holding that. To me, it was a very low probability trade to hold it. Has kicked on a little bit, but it is struggling. It's not accelerating too hard. And if you go back look at it's done the last couple of months. We probably don't need a monthly chart. Actually, go to the month. It's just gone bang straight up into 180. That's going to be a zone where you probably get some sort of reaction off there. So I'm happy just to book that and call it a day. If I'm wrong. So be it. One of the others, STA Santos, just popped higher, but rejected today. So it's open, it's gapped up on the open, obviously on news, and then pulled back. Good side. See, it's up into a zone now. So they're all getting a bit extended, for my view. Getting a little bit extended, except that weekly. Well, that weekly's not too bad. Woodside, mate, longer term, maybe okay. Maybe something just to keep an eye on. It's just this last few weeks, it could be getting a bit extended. You come into that zone, you expect some sort of reaction off there. Anyway, keep an eye on crude. If it does have some more to go and you want to jump in, you're looking for something, just look for a quality setup. At the moment, I would expect that to be backing off before anything. Like I said, BPT, I wouldn't buy buying that up at this level. Wouldn't buy Woodside up at this level. Santos the same. Can't think of anything else. But yeah, they look like they're very similar across the board. They've had a bit of a good run. So if you're holding them, just keep your risk a bit tighter. If you're not, you're going to have to look for more of a complex correction. Not so much complex, but not just it's gone up, a pullback and just buy there. I'd rather look for a bit more of a two-legged move and then look for a high low, something where you can obviously base your risk off and then see if it can kick up and have another leg up, but you're not going to risk too much on it. All right, oil, bonds, and the other thing, I'll just quickly touch on those. Probably don't need to do, here we go. See, that's on a daily chart, so it did push up through that 3% zone. It backed off on Friday, but not much. I mean, it's still above that zone. That's sort of your key. It's a longer term resistance. So whether we've plowed up into it, cleaned it out, and whether we do a bit of a back and fill, like I was saying, that couple of leg move before we start building again, a bit like this price action. It pushed up, pulled back, tried to go again, couldn't, double bottom, tried to go again, and we've had to have a deeper correction to reset a bit lower, just bring in a few more buys, whether we do that or whether this thing just continues on, we don't know yet, but it's something that's I'd expect over time putting a bit of pressure on the equity market in the US. Now, any questions on that? What we're just talking about then? I just want to quickly go over a couple and then whack in your trades, put them in the chat. I thought it'd be interesting looking at, what was it? I better get it up now. Watch list. Thought it'd be interesting looking at, what do I have? US, Swiss. An interesting chart. Is anyone out there trading your currencies or kept an eye on this. So this is the US Swiss, what I was watching for a while, and this is what pretty much what I've been drawing up. We start from a big step back. So this is your long-term, you can see long-term move up. That's your long-term support line. Now what we've done, you can see this is getting, it's over a long period. I know since 2015, you got that bit massive. I don't know if you remember that on the Swiss, massive sell-off here. I can't remember exactly what happened. That just absolutely crapped itself. And then the market was choppy after that. You know, we found a major resistance at 103. Yeah, about 103, and it kept testing it. So we're holding a higher low, holding higher lows in here, tested it, couldn't get through, backed off, backed and filled, found a little support zone. So where buyers were happy to buy it, pushed back up. It found that resistance zone that was too strong to get through again. So it had to back and fill. We retested it, popped up, but instead of having a third or fourth go at it, what we've done is we reacted off it, broken through that support zone at it's about 95 even, broken through, but what it's actually broken is this uptrending line as well. We broke that recently. All right, but then it turned around and backed all the way up again. You can see the last, this is what's perked my interest really. You can see it's getting a bit, you know, higher highs, higher lows, and then we got to about here and then just went boom, straight up into that resistance zone and around 10, was it 10045 or 10050? All right, so we pushed straight up into that zone. So I'm expecting that's quite a good, could, at that stage, you don't know, it's not resistance until it reacts off it. And then that's where you're flipping down to the lower time frames. If we get down to the 4-hourly chart, we'll just drop it down. So what I've been watching just the last few days is just the price action, make it a bit clearer, just to see how it reacted off that zone. So you can see it spiked through, reacted off, tried to go again, built a minor double top, and then it started backing off again, and you get it picking up, pretty much retesting to the dot, falling short of just the previous highs, which were at about 1005, falling short and starting to show some good signs of weakness. Dropping it down to half an hour chart, which is what got my attention. It was more just seeing, well, here we go. And what I'm expecting is some downward pressure. And just remember the extent of that move up, that just powered along. This move up here was really strong. It really didn't look back at all. So it turned around and just went boom, straight up to resistance zone. So you know that there's going to be a lot of buyers that have been building up all the way up and a lot of juice for it to actually roll over, a lot of fuel for this market. And if anyone's going to start closing out, you're obviously going to get the first people that tried to jam it up through, couldn't get there. It was chopping around here, had another go at it. Since you got your double top there, and then you get your lower highs start to play out, and then you get support zones breaking. That's going to perk anyone that's been long for a while. It's a bit of a heads up. What are you going to do? Are you going to hold and potentially take a lot of heat when this thing retraces on you, or are you just going to close out, call it a day, and look for another opportunity? If you're longer term really bullish on it, are you going to wait for another opportunity to get another high low, another good setup for a long term trade up? Because I think no one can deny that that's well overstretched, that move, especially when you look at it on the daily. That move up was well overstretched without really any significant um, correction at all. It started correcting here, popping up, pull back, popping up, pull back, and then boom, really pretty much high lows, higher highs, all the way up. So what got me going was really just this double top, and you got this breakdown, and it started picking up. And then you get these, you can see those red candles just boom, straight down, tried to pick up, found support through here, tried to go up again, and it's just started building, holding lower highs. And when we got to about here, I think it was Friday. I can't remember where I was trading. I think it was on here. Yeah, it was. It was a breakthrough that support. And that's not very good, is it? For me, it was a breakthrough that support. We broke through there. I was holding a stop up here. I had a fair way away, so it never really come under any pressure at all. It's sort of choppy through here and then just capitulated. So you see anyone that's the same sort of price action we watch on stocks. It's the same price action across the board. You're just trying to look at a key zone. You're not trying to just continue to buy. And you've got to know, you've got to build your story. We just talked about that. Okay, it's rallied up quite strong, hasn't looked back. That's a stretch market. It's coming into a key zone, what could be potentially a key zone. Okay, that's your next piece to your puzzle. You tried to go twice, it's backed off, had a little double top. Okay, that's double tops are good. It's a sort of a pressure to the downside, double bottoms, a pressure to the upside. So that's adding into your story. Then you started getting this little breakdown here, and then we've got this little pop up. So you're looking, what I'm looking for here is really the pressure continue to start extending lower. And this thing, it may not have stopped just yet. I've actually got out somewhere around, I think it was 60, 99.60 from, what do you get, 10001. It's about 41, 42 pips, I think, on that. But that was a cracking little one, and it's may not have finished just yet because you can see the pressure could still be rolling over. It's just having a bit of a break here. It washed out this low, could be building another high, lower high, and then rolling over. And sooner or later, you're probably going to find this thing could start accelerating, and you might really start cleaning out some of these buys. So I thought I'd just pop that up there because it's trying to, what we've spoken about in the past. Just build your picture. Build your trading scenario, looking at for key levels, not just looking at random levels, especially if you're trading FX and you're trading indices. You've got to work off key levels. You can't work off just sort of random setups, and that's probably the hardest thing. It's good working on your setups, but you also got to use those setups in conjunction to key levels, and you're building your picture, building your plan of attack for your stock. And this sort of plan is something we've built many times on shares. We've looked at it, we've built our little plan, and okay, if it breaks up through this level, we want to be a part of it because everything before that, building up to that, we like. It's seeing some really good signs, supply demand signs, where the demand is starting to increase, supplies decreased a bit. All those sorts of factors that we've pieced together, and we built our picture. We like it. We're ready to take a stab at it and see if we're right. So I thought I'd chat about that, see if anyone found it interesting. Any questions? Anyone want to chuck in a question on that, or happy with a good little explanation before I move on to, I'm going to talk about AIA. It's another one that I think is a good example. Get rid of that. All right, so I'll go over to, that's not looking nice. All right, we're talking about that. It was Auckland International Airport. Has anyone been watching this? I think I put up an alert a while ago. But if you just whacked on that on the daily chart and you're just flicking through, it's not looking too flash to me off a daily. You can see it's getting constrained up at that sort of 625, 620 zone. You've got a clear base for support around 575, and that's after it's sort of edged down. It's worked its way down with lower highs, lower lows. Good reaction. And just remember, that's where it broke an anchor level. So when it popped up here, that's broken that downtrend. That's been broken. So two things could happen there. It's either going to just consolidate sideways, which it looks to be doing, or it's going to start building a higher low uh, and then start dragging in some buys if anyone's watching. But you've got to put into context of this move. All right, from here, it just looks like maybe it's just been heading down. This could easily, from this chart, can hold this level. It's been stretched up here a few times. Most recently is about where it is now. It's been stretched, overbought. So just purely looking at that there, is it a bit overstretched into that zone? Is there going to be some more selling? And then we're sooner or later going to break that zone. So we could easily just head down from here, off resistance, touch on support, edge our way back up like that, and then hold a lower high. And that's your major lower high. And then just break straight through 575, take out this low and push its way down. But that's all just based on this chart here, because this is downtrend here. We're just consolidating through here and it can continue its downtrend. If you put that in context to the weekly actually doesn't look too bad at all to me. I think it's quite nice. Entry in a weekly chart. Yeah, no, good on you, Lauren. That's my basis for, I'm actually liking this. I really like this, and there's been a few reasons. I think it's got some work to do because you can see from the daily, it's probably struggling just up at that zone. That's 620, I think it is, 625. But the weekly is actually looking good. It's, for me, it's cleaned out. You can see this move up here. It's cleaned out a lot of traders, and it started going near vertical, especially when it spiked up. That was sort of the, well, I'll get rid of that. It's more of a washout. It's just clearing out the highs, a bit of a blowout there, just that little pop up, and it was rejected pretty quickly. And then from there, it pretty much turned around and head south, lower high just in here, minor little lower high, corrected back to the MAs, a reversion to the mean. This secondary tried to pop up, it couldn't. And what we've got here is just that, I'll draw it a bit clearer. It just washed out those highs, which is never a good sign for a bit of a bull, and especially when you've got, excuse me, a bit of divergence there. I don't necessarily look at divergence, but it is something just to take a bit of note at. It's probably not really divergence because it's always just swinging between overbought, oversold. Just forget that. Just forget what I said. Divergence is more, that didn't play out all right, but it's more that bit of divergence there. That's more your divergence in my book, not so much when it swings from between overbought, oversold, overbought, back to overbought. So yeah, but it's just struggling. So it's getting a bit overbought up here. It's more right into a little minor zone. It washed it out and it started holding again. It's holding your lower highs. So it's had to have a deeper correction. And what it's really done is push straight down, washed out the previous low. And that's when we go back to, if we pop back to the daily, remember it's just broken that anchor level. So this leg down is finally finished. Then what we've done is just retested that same zone around 575. So I actually really like that on the weekly. I think that's got a lot of room to move. I think it could be a good little chart, a good little setup longer term. I think it's got some work to do on the weekly especially, and that's probably why you find the daily, and look at that weekly too, it's getting a bit overcooked up here. So I would be expecting maybe it might wash out those highs, but then what I'd want to see is that stochastics go from overbought. It doesn't have to go to oversold, but I want to see some heat. I want to see some sellers coming back into the market. But what I want to see is more on the weekly chart. That's your 575 zone. It's pushed up off there, up into that zone. I wouldn't mind, don't care if it breaks it slightly, but I wouldn't mind seeing a bit of back and fill like that, where your stochastics come back down, and then somewhere within that range, hold a higher low. That's ideally what I'd like to be seeing, because then you could say, okay, it's popped out, it's cleared the way a bit, and it's spent a lot of time sort of backing and filling there and starting to hold some higher lows, and then that contraction where it's coming right to a point, it's starting to break out by then. So I think that potentially could be really nice. And if that's because it's a weekly, it could have a lot of legs in it and really take it those 750 zone or the highs around 750, and could be a nice little longer term move up. But we'll see. We'll see. It looks good. Alrighty, so that was AIA. Any questions on those guys? We'll whack in some charts. If there's anything you want to take a look at, put it in. I've got a couple more I was going to take a look at, but it's more just, I don't think they were technically a nice talking point. PNV, Polynova. Actually, don't mind that. That's another one on the weekly where we've spoken about this a lot, and this is something really to take note of, especially if you're a technical person. There's two things, actually, this was a good one. Two things I want to talk about just on this, as a bit of a heads up for technical traders. Anyone that's trying to learn the art form of technical analysis, just take a note, and it's more of what we spoke about, supply, demand, what's happened in the past. It's just all these little things I like to take a note of on charts. Now this, it's got a couple of good things, good little discussion points. Let me get that. All right. So you've had a good leg up. You can see this move up. This wasn't too big, and it spent a lot of time sort of chopping between, what was that, about 35 cents and somewhere around 25 cents, just choppy there. And you can see this little pop up here. It was off a higher low. It didn't really get too far. It's pretty much just ran straight into that previous high, backed off from there. So what the market's telling you there, it's looking right up until about that point. It's looking like this could potentially set up. And if we're getting some contraction in here, you've got higher lows holding, it's looking to get okay. It's looking ready to maybe fire. As soon as it pushes up into a previous high and then reacts quite strongly off that, a couple of days straight down, you'd be thinking twice, and the market's going to be thinking, okay, couldn't get it through it. What do we have to do? Potentially what happens then when you get these sort of double top scenarios is that the market's got to take it's got to take a deeper correction. What we're talking about with a run up for a high jump or a long jump, if it can't get the distance in the first hit, it's got to have when it has a second go, it's got to take a longer run up, say on long jump. And generally with a longer run up, you're going to jump a bit further. So it's that kind of thing. When it couldn't get through it the first time, it has a deeper correction, pulls back a bit deeper, and then starts resetting itself around 17.5. And instead of, it really didn't build there, just went boom, blast off and tick off from there. Okay, so that's what it did initially. It's pulled back, blast off here. So what I'm looking at here, I like two things. One, it's holding highs. It's sort of, this is a weekly, don't forget, a weekly chart. It's holding these highs. It's got this, we'll look at it back on the daily. It's chopping around up here. It's holding highs. It's sort of that 1/3 pullback of this move up. It hasn't pulled back 50%. It's more around 30%. So it's quite strong. That's signifying a quite a strong little market. The only problem I have with it is it's what's happened in the past. And I'll clear this right out. What's happened in the past, it did a similar type of thing. It held up okay, but, and you probably say that was a good little, that was probably a half decent little setup, held the high low in here, took off, but then ran straight into that resistance zone before we had a deeper correction. This could do something similar with that, what is it, 56 zone? You know, it's all looking quite good. Actually, we'll get into the daily and I'll make it a bit clearer. So just remember, it's mainly what's happened here. If history repeats, we could get a deeper correction here. It's just going to clean out a few more of these traders. It might be, instead of be 30% pullback, it might be a 50% pullback. You know, it's still a good little market, still a good little setup, but we'll have to keep that in mind if you're looking to go long. But I thought it's worth talking about this purely because of the overall price action. Got that. All right, so the markets, and what I didn't like, it was sort of chopping around through here and here, washed out, really just washed out only a minor level, then pop up, then cleaned out the top side as well before it's come back down and really pushed a bit deeper down to about 46 cents. Then it started holding, you're holding a higher low here, but there's nothing for me that's too convincing on this. That's why I'm a bit more skeptical. This could easily be a setup. So if you bought it through those little highs at 56, for example, you may have your risk quite tight, get up to this high at around 57 and then do the same thing it did before and then just have to fall over because it can't get through. May even get up to that high around 58, 59. Might spike up there. So you're only getting a few cents out of it if it is going to pull back. I mean, this thing could obviously just keep going. But when you put it in context on the weekly chart, spent a lot of time through here before it even washed out. It tried to go through initially and then had to spend a bit more time on a deeper pullback before it took off. So you can say that's 2016, a year and a half. Now, have we done enough work in here to warrant it just continuing on to $1, say? Or does it have to just clean out a few of these highs and then have a deeper correction and then go again? So it's something to, obviously, if you're looking to trade it, and if any sort of charts that look similar to this, or if there's something that is perked your interest, you think it's good, but you're just trying to take it apart, you're trying to build it up, build your plan, what could happen, what are your risks on the trade? For me, I'd be happy to take a setup long if I liked it, if it was a good setup in this zone, but I'd always be wary that I could just get blasted out quite quickly. So I'm not willing to take a lot of risk on it, a lot of heat. So I wouldn't take it on a breakout. Say it broke out through what, that high 57. Say I bought it at 57 and had my stop all the way down at 45. I'm not willing to do that. I'd be more willing to, if I got my setup here, only risk a few cents because I know this one, okay, I'm not convinced with this setup. It is holding at higher levels, and I don't mind seeing these little washouts, you know, washout down here, tagging this recent low. We draw that up. Oh, geez, that's looking messy now, isn't it? When we had that washout down here, that was quite nice to see, and it's starting to build off there, but it's coming into a resistance zone. We're overbought. It's not showing me too many signs why I should just dive headlong first, headlong into it to buy. And that's mainly when you take a step back to the weekly charts. Although this action, the fact that it's holding up here, is a very big positive. So I thought it was a good talking point, just looking at that, looking at the price action, and always comparing to a bigger time frame chart to see what's happening on a bigger time frame, because you've got different levels of buyers. Someone's going to be buying off a weekly chart, someone will be buying off a daily, someone buying intraday potentially. And they're all working off different levels. Some got tight risk, some have got looser risk, and they want to see a bigger pullback. But we're all looking at very similar price action charts. The daily and the weekly could look pretty similar, except one's a weekly bar, one's a daily bar. All right, so you just got to be wary. If you just flick it back, and it's like when you say the market, okay, the market's going up. Okay, what are we talking about? The daily chart? If we say the daily chart, but then you look at the weekly, it's actually coming off the highs. It's pulling back, but it's just the last few days it's going up. You've got to put it in context. Okay, anytime you talk about something as well, if you're talking about the market's going up, put it in context of what am I looking at? The 30-minute chart, the hourly chart, the daily chart, the weekly chart, all in context. And then when you're trying to build your trade, build your picture, you might be looking at the entries on a daily. I'm always flicking back to the weekly to see how much of a potential, what probability have I got on this trade? Is it going to continue pushing higher? Could it get a lot of legs and have a really big move? Or is the weekly looking a bit extended and I'm buying it off the daily chart for a move up, which it could be potentially good quality setup? But then it's not going to go too far because the weekly is actually under pressure. So you're going to put all these things into context. All right. So I hope that made sense, guys. Lauren, what do you got here? AIA, we've done that, haven't we? Yep. SIQ. Yeah, that's a good one. I've got that on a watch list. SHV, SHJ. All right, let's get into them. SIQ. SIQ is a bit like just what we're saying. It's holding highs. Go to the weekly. The weekly actually doesn't look too bad, and I do like this one. One thing I don't like is it's just been going up since what 2015. It really hasn't corrected. Actually, that's all the data. It hasn't had a decent correction. This is your first sort of major pullback. We're holding up about above $10. We're chopping around through here. The weekly trend is definitely up, no doubt about that. And what I do like is my drawing tool is the fact that I do like the fact that it's had a bit of a washout, a flush out here. It didn't get too far. It got back down to the anchor on the weekly chart anyway. Had a good little push higher. It couldn't get back up to the highs to break it, so it's not that strong. But then instead of just falling, it's a bit more controlled. So you can see that the level of descent here compared to here, or the angle of descent, I should say, is it's a lot steeper here than it is here. So that's a bit more controlled movement. You can see the sellers are coming in. You can see through here, sellers are coming in and put it under pressure, but it's getting soaked up. And especially it's getting soaked up at higher levels. So that's a very big plus for SIQ. So whether or not, I don't know where you'd be long from, Laurent, what price, but even if you're buying it up here, I actually don't mind it. If you go back to flicking at the daily, so we know the weekly's up, it's looking good, everything's in our favor. It's just the daily, and it's really just zoning in or honing in to the last bit of price action. So I'd probably be willing on this one because I'm not in it. You've got major sort of double bottom through here, 960. This is where you've got your high low. You can even argue that's a little washout. And this is your move up, pull back, tried to go, had to have a decent pullback. It just couldn't get through there the first time. So I was pulled back, washed out the lows, and then started building again, high lows through here. So you can see this is actually looking quite good. So because there's a few levels to get through on the upside, so you just be wary that sort of that zone between 1170 and 1190, about 20 cent zone. It's just fallen short here. I don't mind this pullback. You can see that sort of contracting in. So ideally, if it's just going to go up from here, if I was going to be a buyer, to be a buyer through 1160, hold my risk if this is the low at around 1120. So I'm not risking a lot on it at all. 1110, well done, well done. I think you're going to get a further opportunity to get something handy on this one. If this one fails, this is looking really good. And you can see this price action, it's the volatility is coming out of the market and it's starting to rise. So it's starting to get a bit more controlled. A lot more buyers are starting to see this. It's looking good. Your weekly buyers who have sat through this, just watching it, now starting to edge in. They might have bought some here, bought some here, bought some here. Your big positions. So I think this is coming out at the end. Now, if it does struggle up here, if it touches up here, it fails or it washes out, it gets rejected pretty quickly, you'd have to think twice about it. But from 1110, look, you're probably going to have something up your sleeve there to play with, and especially if this setup is what I said. Let's push it up. We're sort of about here now. Change colors. Basically, I'll probably be happy just to be buying it on a breakthrough here, hold my risk here. If that plays out nicely, you could potentially raise your risk to break even. You're below a key. You're not below a key level, but you're below a level where if you do get tagged on it, something's wrong. all right? And then you pretty much got a risk-free trade, and you can follow it up. And if you start getting it building like that, just follow it up here, pull back, higher low, breaks through here. Remember, breaks. As soon as it gets through there, you raise your risk, and so on, and see how far it can go to. See if it starts really accelerating, because if it gets through 1170, 90, that sort of zone through here, in one move, this thing could just start to blast off, and then you get a longer term, strong move. So a lot of people have been watching this pretty much most of this year. So it's been 6 months consolidating and starting to build that structure. It's looking good. SHV, we'll get onto that. Two things. This one, the daily and the weekly are up. That weekly's just ticked up, but for me, it's getting a bit ahead of itself. As in, how to explain this? I don't see it compared to this move. And we're on a weekly. Yep, we're on a weekly. So there's a few little things. I think it's caused to just be wary. This move here is quite good. You can see when it took off, it had a good few days. When it was getting really bullish, had a good few days. This 1, 2, 3, 4, 5 before it had a red candle. Then the 6th day was up again. Sorry, 7th day was up again. Another bit of rejection. So you can see a bit of selling coming there. Red candle, good solid day on the downside. Bang, turned around and went straight back up for another 9 or 10 days. So that's a bit different to what we're seeing here. So that's your key support around 4. You've got, I wouldn't have bought it here. It's just popped up into the anchor level, pulled back, built your higher low. Okay, it's all looking good. Broke through on this candle here and then started holding. This is a bit more controlled. You can see it's only got a few days up, a couple of days back, a few days up, which is not bad. You know exactly where you're going to hold your risk. Your risk levels are just below your higher lows. But then what it's doing, I don't like that in conjunction with it coming up into a key level around that 750 zone to 760. Because that's a bit more controlled. It might edge up here and then you get a reaction off that 750, 60 zone, react lower, could go all the way back down to test support. Then you might get it might just pop its head through, then have a pullback and build more of a major high low. But all that's going to take quite a bit of time. Remember, this is a weekly chart. I mean, you've still got some room to move, and it's about 50, 60 cents, 70 cents. So still some good upside, but it's just something to take note. That may fail a bit earlier. It may fail pretty much where it is now, around that 7 mark. It's just coming into another little minor level there. It's not a key level, but that is could prove to be a bit of a reaction zone, because everyone will be focused on that 750, 60 zone, and then just forget, and it starts reacting off here all the way back down. It could go down to 4, and all that's, like I said, it's going to take time. So if you just sit there and watch it, you might be behind the 8 ball again. So just be wary. I mean, it's still looking good. The positives are that it's had this big sell-off, reacted up. It's this reaction down, back down to retest this support zone. Again, the angle of descent is completely different. That was that's capitulation. That's controlled. That's cleaned out a lot of these buys. There's previous buys. Buyers started to step back in. Anyone that has held this and didn't get out, if they bought it up here and they held through a lot of heat and it's popped up and started rolling over, they've pretty much just got jack of it, and that's why you get this more of a control. So there's probably less of them. Does that make sense? So there's buyers starting to step in. These people are getting a bit sick of it because they've been under pressure. It didn't bounce back to didn't come back to break-even point. They were still down slightly, and they're watching their losses get slightly bigger as it's heading down again, and then they're just getting out. It comes back down to support. Buyers start to step back in again, and that's what's happened. So you have got a double bottom there, a nice little support zone at 4. It's proven itself. It started to lift, so buyers are happy to protect that zone. It's just whether or not it comes up and this proves to be another resistance zone. All right, and sellers start jumping back in there, or anyone that's bought it through here is going to get out because they're not too, the short-term picture on the daily chart looks great. I guess if you go down, if you look at this on the daily, that looks good. But that has been going on for quite a while now, pretty much good part of the start of the year when it started lifting. So you got to put all that into context. It's getting a bit stretched up here on the daily. It's stretched on the weekly too. So how much energy can this thing keep pushing into, potential break of 7 or even breaking up through that 760 zone? So just keep that in mind anyway. Yeah, no, good work. So what else got there? SH, last one we get on to SHV. J, is it? Shine. So you're picking some good ones, it looks there, Lauren. You look like I like what you're seeing, to be honest. So what you did with that last one, if we just go here, what you're taking note of the bigger picture. Well, I feel it. Correct me if I'm wrong. If I'm going to give you praise and I'm off the mark, I guess you wouldn't correct me. You're seeing a good move up here. You're seeing good capitulation. It's reacted up, and then you got this edging lower. So that's, to me, that's a sign of buying starting to come in. They're happy to start buying. If they're building a big position, you don't know what they're doing here. Maybe just building a bigger position. They're buying some on the way down into support, and they start protecting support. It starts building, lifting back up off there. Um, you're looking at you're looking at it nicely. I think you're starting to put yourself into some shares that have got, I think, a good probability setup. High probability of working in your favour, which is always good to see. Okay, SHJ. Um, let me just see. This one's not as good, but it is still, the daily trend's higher. If you look at that weekly, it's starting to lift. We've got, a similar type of scenario. Not too bad. You've had some good selling in here. Market's lifted it, lifted up here. It's sold down. You even had that gap down to here. So that's not saying that hasn't proven itself just yet. Started lifting. You got a couple of moves up here. Then it started to sell down again, and then it found that support zone, and then started lifting off here. And this is important. That's becomes a double bottom. It's not at this stage. It's not proven just yet because this thing could just bang straight through another lower high. But instead, what we did, we pulled back, fell short a bit. It's only really a few cents before we started lifting again. So you can see it's really nice action. Um, so you always want to see that the markets moves down, it pulls out, has another reaction there, but then it starts to lift. And when you see this type of reaction, I always think it's good. And that's what I'm looking for because that starts to, you can see the confidence building and it's a bit more contained when it starts edging higher, and sooner or later it starts accelerating. I'm not saying it's going to be a nice smooth little curve like that, but it starts accelerating when things pull back. They start building slightly, and the moves to the upside get a bit more volatility to them. The pullbacks are shallower, the moves higher get started to accelerate, so you start to see this curving up. And that's, if you can get into that zone somewhere in here, that's always ideal. And you can see that's just starting to perk its head up now. So ideally, I'll be looking for maybe a pullback. Maybe, well, draw that bit better. It's pushed up, maybe a little pullback here, and then start to get your typical setup, something like that. If you can lift around here, maybe pull back to somewhere around 80, retest this little support zone, and start to lift from here. But yeah, it looks good. My darts are aiming better. Good work, good work. All right, guys, we'll probably call it a day there. I think we've had a good chat about a few different things. I hope hopefully there was a few handy hints. Just what we're discussing there's a few points that made some sense. Um, I'm always a big believer in flicking around between different charts. If you're trying to learn the skill, you're trying to learn the art. Obviously, a lot of people here, I'd say there's a lot of people here smarter than me on their fundamentals. Um, so I wouldn't suggest that's a problem at all. You can understand, you can read, the news, you can see whether fundamentally the company's really good. When you're looking at charts, it's a bit more, I'm not saying it's complex, it's just there's probably a bit of a procedure to it. It's not hard. It's just that you've got to have a view. You've got to build your picture, build your plan, and if you like it, if it all matches up, then you're willing to have a go at it. If it doesn't, you might have to put it on a watch list. But if it just looks rubbish, you just leave it and move to the next one. So I think just by what we've just chatted about today, flicking back and forwards, so maybe looking at the weekly in conjunction with the daily. Okay, what's the overall picture? And trying to build that picture in your head. And then, okay, the next step is, okay, that's going up, that's going up. Well, where's my levels? Where's my key levels? Are we going up into a key level? Or are we coming off a key level? What's happening there? And if it's coming off a key level, okay, that's all looking good. What am I waiting for? Just a setup. You get your setup and you go in. And you're sort of obliged to, once you've done the work and you've built your plan, you're obliged to honor your setups too. And it makes it a lot easier too. When you get a good picture, a good, story that you put together, it all makes sense and you've done it, you do it a few times and that's why it's always worth, you take a snapshot of something that's worked for you, even things that haven't worked for you. If a trade hasn't worked for you, take a snapshot, write some notes on it, file it away. So when you come back to it, because sometimes it just doesn't work. You go, oh, I know why once I'm out of the position, and it's quite clear in hindsight. Put type some notes in there, chuck it away, save it on your computer, and then just every now and then I just would always go back over some charts. Sometimes it's good to see if you've actually good on you, Paul. Good work, mate. Um, it's good just to go back over them because one, it's you can see quite clearly if you've left it for 6 months whether you're improving, and if you are, great. But if you haven't improved, it's quite clear when you start if you're making the same mistakes, and that's why it's a good kick up the pants to say, oh, if I'm making the same mistakes, you know, it's you should just stop them. There's no sort of argument. There's no, oh, I'll try to work out of that. No, just stop doing it. Because once you stop doing it and things start improving, then you go, okay, that's quite clear. But unless you don't do that, sometimes it could be really hard to see that you do a similar thing wrong all the time if you're not taking some sort of a snapshot of it, or you're making some notes somewhere, or you're taking your stats. Um, it's probably not that important. I mean, I'll talk about stats and things like that. It's more of an intraday thing, and even shorter term trading. It's always good to take your stats because you're doing so many more trades. You're so much more active, and good things and bad things are going to stand out quite clearly. So when you take your stats, you can see them. You can see what stands out. You see what you need to work on, and things that are working. You can see what. Not saying improve them, but you can see if you can push them more. So if this setup always works for you, look for that a bit more. Start scrolling through the charts and looking for that more. If this if you're always doing something like I know what I would do, I wouldn't hold it as long as I could. Then I'll be trying to work on holding longer because I'll never know whether this is a trade that's going to kick off rather than 5 or 10 points, or a dollar could kick off $10. You never know, um, especially when I get out and there's no reason to get out. That was a bit of a problem a while ago. There was no reason to get out, so why'd you get out? Because that was the one that kicked on. Especially when you're trading the SPY, you might get 6 points, 10 points, you're all happy. Kicks on 50 points, and you're kicking yourself because there was no reason to get out. And that only shows up when you start taking your stats, start writing things down, start taking snapshots of your charts, taking down some notes, and then you can look back at it later, say, okay, I've improved. Good, I don't do that problem anymore. I still do that. Let's fix it. All right. Sorry, that was a bit of a sermon there, but hope you enjoyed that. Get into it. Enjoy your day. We'll finish it there, and we'll be back in on Thursday at 12:30. If there's any questions, you want to shoot us an email, feel free to support@tradesetup.com.au. Enjoy, guys. We'll speak to you again soon. Bye.